Talk markets, the economy, and more. Joining us now, Mohamed El-Erian, a chief economic advisor at Allianz and president of Queens College at Cambridge University. And I don't know what that told us last week, Mohamed. No one thought the move all the way to 2% was going to be a straight line. We know about, progress is made, and you get a little bit of a setback. It's not just a straight line, but was it more troubling than that? We knew that. Was there something more troubling in those numbers?
I think those numbers just confirmed how bumpy that the last mile of getting to 2% will be. And you're seeing expectations move tremendously. Joe, 2 months ago, we were pricing in 6 to 7 cuts. Today, some people are even saying maybe we'll get a hike. I don't think we will, but it shows you how much the conventional wisdom has shifted. And that's because, consistent with what you've heard just now from Walmart, people realize that there's a limit to goods deflation, goods prices actually coming down, and service inflation stays sticky, which means that getting to 2% is going to be tricky.
Would it surprise you, Mohamed, if we got only 2 rate cuts this year and it didn't happen until the second half of the year? Is that looking more likely now?
No, I've been in the 3 cuts starting in June, so 2 cuts wouldn't surprise me. My hope is that the Fed realizes that they have to think much harder about the soft landing glide path to 2%. It's going to be much longer than they would like, which is another way of saying that 2% inflation shouldn't be the immediate target, should be the much longer term target. But the glide path is going to be longer than expected. We have to maintain this U.S. exceptionalism in growth. It's been something that has allowed for a softish landing so far, and it's also serving as the global locomotive for the international economy.
Well, that was fine until, as long as inflation was behaving, it was the kind of Goldilocks that we love the strong economy. Are we back to thinking that the Fed needs to slow down the economy? And that if that's true, if they do need to do that with interest rates, they can always overshoot, and then we're back in the possibility of a hard landing.
Okay, so we are in restrictive territory in terms of interest rates. So the question is, how long do we stay in restrictive territory? This economy is slowing, but it's not slowing into recession, and that's something that is really important for the well-being of the economy, for the well-being of the global economy. So the risk is, Joe, that the Fed ends up in restrictive zone for too long. That is the risk right now. That is the potential policy error. Very different from where we were when you and I were talking in 2021, when the Fed was thinking inflation would be transitory. Now there's a risk they'll make the policy error the other way around. So
Mohamed, if we're really in restrictive territory, we've been there for a while. Why haven't we already seen that reflected in the jobs number or GDP?
So first, we've seen it in inflation. Inflation has come down sharply. Why haven't we seen it in GDP? It turns out that we have an exceptional economy. It turns out that there was much more resilience. Balance sheets were much stronger than people had expected, both at the corporate and household level. It turns out that we are an incredibly agile economy. It turns out that we are starting to promote more and more the future drivers of growth. I'm speaking to you from the UK. Look around the world. UK, recession. Germany, recession. Japan, recession. China, struggling. The US has been able to navigate this period of tighter interest rates well, and it's something that we hope will continue.
I just don't know how to view that if the rest of the world, we can be, the exception to the rule, or we can just join everyone else eventually. You don't think that's likely, that we're just going to be the last to actually see a slowing economy? You think we continue to maintain our preeminence?
So to be clear, I think we will be a 1% to 2% growth economy. I don't think that we need to fall into recession unless we get a policy mistake or an external shock. Joe, household balance sheets in the US were much stronger in the rest of the world. Why? Because the fiscal transfers were stronger. So that helped growth last year, but it's not going to help growth as much this year. So we're not going to grow at the 4.9% pace of the third quarter, the 3.3% pace of the fourth quarter. We will go to 1 to 2%, but there's no need for us to fall into recession.
All right, we will see, Mohamed. The Fed, they got to take down that mission accomplished banner. It's still in the process, right? It's a work in progress, and we got an election coming up.
The biggest mistake is the mission accomplished. That would be big mistake.
Yeah, and we got an election coming up. So